Sharing screen. Three, two. Good morning, traders and investors around the world. Welcome to this first day of August edition of Pre-Market Prep Plus. Joel Elconin here with Rob Friesen, and I got the wrong screen share on here. Let me change this real quick. You guys don't want to see me. And we will go boom. And we'll go boom. And now we will get the S&P 500 index futures up there. And one of the oldest tricks in the book, take out the pre-market low by a few points and rally, and then take out the pre-market high and then decline, basically sitting mid-session here right at 41.20. That's down 13.25 handles. Crude. Whew. Down 560, 93.03. Oh, pressing on that major support at 92. Just think, this Friday, we traded up to 101. That's a volatile instrument there. Gold, trying to get to 1800, but can't, up 260, 1784.40. Silver in the green too, not as much as it was before, but by about 8 cents at 2027. Bitcoin, little bit of a pullback after a good week last week, down to 610 at 23,380. And Ethereum futures, they're just slightly in the red, $54.50 at 1674. I'm going to stop the screen share, and Rob comes out with the topic of the day, key levels off the open. Rob, you have my attention. What do you want to discuss?
Well, share my screen here.
Let me stop mine. Okay.
First, share that. So no matter where your ideas come from the day, it could be a pair trade that you want to, execute fully, but sometimes, trading pairs, it's about being an artist as well, not just being a statistician. So sometimes you do one side first. This comes into play when you're doing like crutch trading, where you trade one side and then you trade the other side if needed. It's like leaning on something. You have that crutch, right? That support, that safety, that confidence to take to one side. So that's the more artistic side of trading pairs. And you can do the same thing when you approach baskets. So wherever your baskets come from. So your basket ideas may have come from one of our dashboards. This is the seasonality dashboard, which we recommend for, kind of that context as you go through the year. There are many repeating events. Nothing repeats perfectly, but the themes are there, and there's a reason for seasonality in general to be like of fundamental value, and that is there's certain institutions that are active, at the first day of the month, the last day of the month, expiration, the last 5 days. If we just flip over to August, for example, since we're in this month, we mentioned before that the last 5 days, 3 days, and so on are kind of where any benefit is, in this market for the SPY, and you test it against other things. But before that, the market's expected to be choppy or flat. We typically in August have a lot of algorithmic trading. A lot of program trading in the past was a dominant part of the volume for the month. So it's a month where professional traders take time off. Institutions aren't as active. That's just August. It's the doldrum month. Now, there have been some surprises in history where all of a sudden August is on fire. I mean, light volume, there's things that can happen. So it depends who's in charge, right? So anyway, so wherever your ideas come from, right, whether they come from any of these reports that we have, or whether you use the web screener and you get your ideas, approaching the the pre-market, looking at how things are trading. Joel mentioned the futures, if you have opportunity to watch that, and how you participate in what the market's offering is really important, right? So back to our seasonality almanac, if we had some symbols in mind that were of particular interest. Technology has generally been a bit stronger for the last couple of weeks. So some of those tech stocks, you might be saying, if I see an opportunity to participate in them, I'm certainly going to be all over it. And you can hedge with an inverse ETF, like for the SPY, you can use SDS. For the NASDAQ 100, you can use SQQQ. Very liquid. They trade nicely, and they're a great way to hedge with lower capital. So, a 2x, you only need half the capital. A 3x, you only need a third of the capital. So you have this ability to have your anchor, or your thing to lean on, or your thing to change the weight anytime you want. So you've got your list, you've got your ideas that you want for the day. Now let's go to the day. So the first part of approaching the day is knowing the context of where you sit. Okay, part of that's the pre-market and overnight session that Joel mentioned. Part of it's just looking at how things have traded on the daily. So if you're using the SPY or some of those types of products, the inverse or whatever, then it's important to focus on what the equity side is doing without the overnight futures, because that's what you're going to be using for your hedging, right? So I would say many of our audience here are not touching the futures. They're not trading E-minis or whatever. So this is my discussion here today, is to point out some things that are hopefully helpful. So the February 24th low, the consolidation between May 27th and June 8th, and some of these other numbers in here, all key, all relevant. We pushed up towards it. With the SPY, we're sitting, right in the middle of that. Again, the NASDAQ already broke above it. The diamonds didn't quite get there yet. So the SPY is kind of the mix between the Qs and the diamonds in terms of how it's performing. So look at that, how close we got. So we're at this key kind of inflection point. Can we rally through above this? Can we get into this blue sky? And it's not completely blue sky, because you have lots of numbers to go through as we go up, which is always great. I like that better than when we're making brand new highs and have no numbers to lean on. Then you're looking at percentages, you're looking at standard deviation, you're looking at ATRs, because you have nothing else to really
Nothing
measure,
else. No,
right?
no.
Right?
Yeah,
But I like this situation much better. This is a great air pocket here, and there's lots of numbers to go through. And we probably will be contentious with all of those numbers. You'll see, like up in here, rallying to this point here, we may move towards it and then fail off of it, and get people shaken out, or some shorts opportunity coming in. So there's going to be lots of that. Okay, there's plenty of numbers to go through, and many of these highs also correspond to previous lows, right? So it's really a rich landscape here of numbers. Now, when you're approaching what to do with your baskets or your pairs, so in my end of day write-ups for the top 10 list, S&P top 10 list, or the Russell list, we talk about some of these things. So I think it's important to explain how it works. So the pre-market low, pre-market high, definitely important. The open where the market opens. The open and the close are the two most important numbers for, an index or even a stock every single day. But also at any point in time, what the high is or what the low is that's been put in place. So those are moving targets often, right? Because they're developing. But the open is not a moving target. You have your open price. So that becomes that plumb line. So the market opened, pushed up, then pushed back down. And we call that, an open crossover move. So when you're trading off the open, it's really important to have any other, framework in mind. This is still an inside day on the ETF itself, right? Look.
Yeah. Oh, for sure.
Right?
Yeah.
See,
Yep.
we did not take out the low. So I would not, if I was long, right? And I would not capitulate just because it broke down slightly, because we didn't take out yesterday's low or Friday's low, right? We didn't take it out. You have to have these numbers to lean on when you're trading. So we crossed back through the open. Okay, so that's definitely a key thing on the way down. But there's no fire alarm here, 5-alarm fire. There's we haven't taken out yesterday's low, and we're looking at it from the perspective of where we opened is already an inside day. So if we're at an inflection point, there is the tendency that it can be, let's pause and reflect, and let's see if we're going to get commitment of the buyers or we're going to get commitment of the sellers. So this is, the market's kind of a little bit concerned about this and wants to say, prove it to me. So first thing, we went down, but we did not take out yesterday's low, and we're dealing with an inside day, right? Now, we had plenty of opportunity to test the low. It didn't quite get there. It turned back up. And what did it do? It went back through the open price. Okay, it took a little bit, but it got through it. And so what's the next target in mind? Well, you already know what the high was that was established. So if you hedged perfectly, you bought your stocks at a discount. Remember, one of the edges is that we're looking for buying discount. The edge goes to the long side, regardless of what happens next. You could say, well, yeah, but it could go lower. Yeah, but yeah. Well, we have something to lean on. We have Friday's low. Okay, so yeah, it can go lower, but we can deal with it. We have our hedge. So it can go lower. And it did slightly, but it didn't break out below that. If you were perfectly hedged, that's fine. You're feeling okay. What happens next? We go back through the open, and we then move towards, and it happens quickly, I understand. It moves towards the high that was set right after the open, and we take it out. At that point, you're still in an inside day, but you're looking to, where's the pivot for the day? Where's R1, resistance 1? Where's resistance 2? Where's, what's the high of the day? What are these things that we can track to for the day? Because we still have an ATR of $7.40 on the SPY. Okay, that's the 14-day ATR right there. So you still have that potential for it to be normal. What's normal? An ATR a day. That's kind of normal, right? Plus or minus a standard deviation. So I'm comfortable with $7.40 of movement. I'm also comfortable with one standard deviation less than that and one standard deviation greater than that to be normal. That's normal. Okay. So we got to let it try to be normal. And don't exert your will on the market and think other things. Just let it be. Let it be. There's a song about that, right? Let it. So it's moving higher. And at this point, if you were fully hedged, you could start to incrementally decouple. If you're more advanced and you're, more confident, you could decouple fully and then just let your long stocks, which you did buy at a discount, right? Because we opened down from the previous day. There's the previous close right up there, right? So we opened below the pivot. We opened below, previous close. We had plenty of things to lean on. As this progresses up, you're now light on short dollars, or you're only long. As you targeted, that could be a point of failure there. If you said, you know what, I think it's done. I'm going to lock my hedge back on, or I'm going to take some profit. I don't blame you for that. And especially if you're just starting out, you're going to be playing it a lot tighter to the vest, right? You're going to be, not getting as much as you can. And trading isn't about playing a perfect game of buying the absolute low and selling the absolute high, right? It's not that game. It's a game of incremental edges, incremental advance, right? Exploiting that slight edge constantly. It's what you do all the time that matters. And so if you live in the slices, it's fine. Anyway, we did finally cross through the previous close. So what are you looking to next?
Previous day's high.
What is the high? And we didn't quite.
Not yet. We're there. We're knocking on the door.
It's stretched, right? It's stretched. At the first run at it stretched, and we're trying to do it again, right? So it really does want to get above there, and the technology stocks and NASDAQ probably so much more, which I'm not staring at the moment. But the SPY is our S&P 500. I mean, it's good coverage. It is market cap weighted, so that some of the tech stocks anyway are going to be, stealing the show for the day, I'm sure. So. But this is important. And if we take out, so we had a previous close crossover. So again, open crossover, important. Previous day's crossover, important. And then your pivot structure numbers as well. And your VWAP, which is this blue line here. We pulled all the way back kind of towards that VWAP and went through it slightly. But some days we trade, because there's so many algos that work large orders, just very, very small positions at a time, all around VWAP, so discount to VWAP. And so that's why things often oscillate back and forth over VWAP, or they oscillate back and forth over the previous day's close. So, learn these basic things about behavior. And when you're in lighter volume markets, you're going to get a lot more technical trading, a lot more, indicator-based trading. So now we're getting that break above the previous day's high, right? So
trying.
We're trying. It's there. But the thing is, how much of an ATR is it? So when you measure ATR, so $7.40 for the SPY, you measure it from the previous close down to the low, and also you measure it the other way, from the low of the day to where we are to the high of the day, right? So you got to measure it both ways. Don't forget that. From the previous close to wherever you go, and from wherever you are or wherever you went to, then you start measuring from that point. Okay, I hope that helps. But there's so much of an advantage in the first hour of the day as we test numbers, as we go through these price levels. You can create so many if then statements. You can ask the market to prove it to you. You can decouple, you change your weighting, things like that. So the key thing is, don't try to make something happen. Just learn. And I have some education in the forum here that you can look at. So we have there's some Q&A in the forum, but there's some education that we talk about in our courses regarding pair trading and regarding price levels for single stock trading. And it's good to know both. It's good to know relationship-based trading, hedging, and also how to trade single stock ideas and ETF ideas. So the price levels are really important. So please make use of what we have. If you want to, follow this top 10 list, which I have a lot of, end of day commentary on, which helps with kind of building on what we're talking about today. It's just an ongoing write up. You can participate by signing up for that. Okay. So hope that helps. Hope that helps.
Yep. Stop the screen share here. I just want to put up, we do have this event coming up. August 18th is going to be live during the trading session hosted by Spencer Israel, me, Dennis, and Rob Friesen. Boy, oh boy, are we going to cover a lot of stuff in this event. Stuff that we talk about on the show a little bit more in depth, event-driven trading. I'm going to teach you guys how to do my technicals. Rob is going to follow up with seasonality and quantitative approach. Dennis is going to go right into his swing trading in relationships, and then we'll put it all together, hedging what we just talked about, and also Q&A. Boom, boom. Let me share my screen. Use the code PMP10, and that will get you 10% off. And we're looking forward to this event. That will be on 2 weeks from Thursday. So go to premarketprep.com and sign up for that. Thank you, Rob. I'll wait for this to come up. And if you got we just got another minute or so here. If there are any symbols that Dan back or any of you else out there want to take a quick look at, we did take out Friday's high. That also coincided with your June 9th high at 45.75. So that's still, we're definitely not out of the woods yet, but that's it for today. We're up 10 3/4 handles, 41.44. Buy the dippers, prevail again. I guess we're not getting any tickers. So Rob, thank you for that informative session. Back with you guys tomorrow, same time, same place.